Junkin of Agriculture Strategy, and this is the show, The Business Culture of Agriculture. And with us tonight, we have Peter Boyes of Boyes Financial Services out of Settler, Alberta. Now, Peter is known as one of the top financial planners in the country of Canada, and he's going to share with us tonight. I think he represents the best of financial planning services, and I'd like him to just explain what a normal financial planner does as far as farm succession planning, and he can explain his business process and how he works with farmers. I think for one of our first shows with the business culture of agriculture, it's important to understand what the normal business process is related to farm succession planning. So,
well, first thing I should point out, Andy, is that I don't have a financial planner designation.
Okay.
You know, so I'm actually what's called a financial advisor here.
Okay. Sorry.
But because of my business background and having owned a farm equipment dealership and worked in numerous positions with a major farm equipment company, I have a lot of business experience, and I have an engineering diploma. So you know, I'm a numbers guy.
Yeah.
So you know, I was educated in the School of Hard Knocks, which is the best education you can get as far as I'm concerned. So
most expensive one too.
Yeah, and you know, and you know, I've worked with farmers all my life. I came from a farm in England, so you know, like I said, I understand the culture. I understand what drives people to be farmers. I understand the pride that they have in what they do, and you know, I'm very fortunate to be a point in my life where I don't have to work anymore, but I choose to because I love it.
Yeah, and tell us about where you're from, like Settler, Alberta. Where is that?
Settler, Alberta is a little prairie town midway between Edmonton and Calgary, where we're basically Red Deer's midway between Edmonton and Calgary, and we're an hour's drive east of Red Deer out in the prairies. We laughingly call it the heart of the mad cow country.
Yeah. And so what kind of commodities do your farmers mostly have, and what's the average size of operation?
You know, we've got farms everywhere. We've got farms everywhere from 3/4 to, you know, 50 sections.
Okay, there we go. And a section, for those who don't know, is 640 acres. Is that
right?
Correct?
Yeah. Well, we got ranchers out in that east country that, you know, have, you know, some of them, you know, almost have townships.
So,
yeah, commodity wise, we grow you know, canola or barley, oats, pulses, pretty much anything you can think of. You know, some people are starting to grow various different types of bean crops around here, peas. You know, we have some pretty entrepreneurial farmers here.
good. And tell us about your business process. How do you do succession planning? What's the average age of most farm sons and daughters?
Well, average age, I would say, of, you know, the usual kid that's working with mom and dad is probably between mid 30s and 40.
Okay.
You know, some younger, but I would say the majority of the farmers that we deal with, the parents are in their 60s or older.
Okay. And to describe your business process, like how do people usually find out about you, and what kind of processes it usually entail?
Well, we do quite a bit of advertising. I write a weekly financial tip in our local paper. We hold seminars. We work with two fairly prestigious accounting companies, so we refer clients to them, they refer clients to us, and we do joint farm calls. And we do a lot of joint work. The process is we gather a whole whack of information and just drill down and try and figure out basically, you know, what the net worth of the farm situation is, what their cash situation is, what the embedded capital gains liability is and other tax liability they have in the farm. And you know, just try and figure out, you know, what kind of risk management processes they have in place, how much insurance, you know, do they have critical illness, disability, you know, are they adequately insured as far as buildings and machinery and the rest of that stuff? We don't get into general insurance, but we can refer people to a general insurance agency if we have to.
Okay. And so what's your role when you go out there with the chartered accountant? What's your role and what's their role?
My role is to kind of kind of in a gentle way disturb the clients. Basically we start out with just a sort of a simple question and answer conversation, and as you sort of pick up on different things, you sort of guide them. You tell them, looking at some of the issues you have, here's some of the things that we've done for similar farm family situations. We try, and our process is designed to be educational, not sales.
Okay. And what's the accountant's role?
The accountant's role is to answer all the questions that I can't. I know enough about accounting and legal matters to be dangerous, right? I do know enough about accounting to be able to look at a net worth statement, or a corporate financial statement, or people's T4s, and see some potential issues.
Okay.
And it's nice, while I'm talking about some generalities with the farm clients, the accountants that come with me can be going over the tax returns, or looking at net worth statements or whatever, right? And they can see what programs the farmers are on. They can see whether or not they're proactive in some of the stuff that they're doing. And it's just a great, I've always believed in being a team player.
Yeah.
You're a lot stronger when you're dealing with we're dealing with some pretty big farm operations, and you got to know what you're talking about.
Yeah.
And especially with the technology that farmers have today.
Yeah. What's the time period from the time that you're contacted to the time that you really have a decent succession strategy in place on average? I mean, there's always those peripherals.
Well, I would say probably the quickest we've done something is 6 months, and the longest probably 5 years or longer.
Okay.
We've had situations where you've taken, husband and wife from a informal partnership, income splitting, to a formal partnership, through to incorporated, then holdco, and an operating farm company. We got quite a number of farmers around here that have an oil field trucking business, or some other outside operation, and a lot of those people tend to commingle farm and other business things, not realizing the kind of liability that they're putting themselves in for. So that's when we set up holding companies, co, and a business operating company.
Give us a typical example of a Western Canadian grain farm that you worked with in the past 5 years, and what that process entailed, like that experience has been.
Okay, well, some fairly well-to-do couple. And she worked off the farm. Straight grain farmers. Pretty big operation. Probably worth $6-7 million. Basically, farming as a partnership, an informal partnership. We took them through into a formal partnership, and then incorporated the farm operation. When we started with them, they were working with a small town accounting company, and I convinced them that we needed to be dealing with a bigger company that has a much broader understanding of agricultural finance. Once we got them incorporated, then their son, who was working in the oil patch, decided that he wanted to come back onto the farm. Their other 2 kids are daughters. So basically what we ended up doing is setting up a holding company, and basically what we did is we did a estate freeze. The son got common shares, and the parents got common shares, and then the parents took back preferred shares for the value that they put in. And then basically we set it up so that the girls are going to end up with $4 million worth of life insurance plus whatever's left of the parents' uh, savings, retirement savings and other assets at the end of the day, and the son's going to get the farm.
Okay. And what are things that farmers just don't expect on average? Like, what are hurdles that you encounter that the farmers just did not expect happening? What are the most common things that name two common?
Well, probably the single biggest issue is, everybody, a typical farm family, mom and dad have one set of assumptions. The kid that's working with them has another set of assumptions, and the kids that aren't involved in the farm anymore assume that they're going to get their share at the end of the day. So, you've got all these people wandering around, assuming that at the end of the day, everything's going to be split relatively equally. And, and the son's assuming that he's going to take over the farm, but he has nothing on paper to say that he actually is going to do that.
Yeah, and there's a lot of 40-year-olds that have nothing on paper at all. And in those situations, I get called out to the worst case scenarios, and it's crazy that a lot of guys have been putting their blood, sweat, and tears into the operation for 20 years or more, and they sometimes don't have anything.
Well, I remember a situation, where two brothers ran a very successful farm and a manufacturing operation with their dad. When the dad passed away, they got to fighting over what was going to happen, and 5 years later, the farm was gone and the lawyers had all the money.
Yeah, and as soon as you get the lawyers involved, you might as well
it's financial suicide.
Yeah. And do you want to talk about how many farms have you seen in the last 5 years where, because of a concern by the parents of a divorce, or one of the sons or daughters getting divorced, they've delayed the succession planning process?
Well, quite a number of them. It's actually beyond scary in some situations. I was dealing with a farming couple several years ago where the wife suddenly up and decided she wanted to leave. And I think, and 5 years later, they're still not settled. And, it's totally destroyed their farm operation because their son wanted to take over, but there's basically no farm left to take over.
Yeah. It's crazy. So tell us a tough situation you've turned into a good news story.
Fortunately, we've had more successes than failures. A typical situation that, here's a typical situation, older guy, late 60s, got sick with rheumatoid arthritis, can't lift his arms above his shoulders anymore. And, nice operation. They had a decent house, but it was getting a little run down. Nice line of machinery, fairly new combine, swather, and grain truck and sprayer, and a 4-wheel drive tractor. And I got referred into them by the auction company that was going to do their farm machinery sale. And so the first day I go out there, we sit down with them, and I ask if I could have a look at their tax returns. So I'm looking through this stuff, and I kind of seeing some things that was a little alarming. And I said to them, who's doing your books? And he said, one of our church members, who's a retired bookkeeper's doing their stuff. And I said, well, I hate to tell you this, but I said, you've got some pretty serious issues here. I said, you've been pushing a big dam of tax in front of you. And I said, my first recommendation is we need to take you and get you in front of a real farm CA. And of course, their immediate thing to that was, well, geez, that's going to be expensive. And I said, well, if I was to tell you that you could, you would maybe have to spend, $8,000 to $12,000 to save $80,000 to $100,000, would that be a reasonable deal? And after a little bit of thought, he said, well, I guess so. So anyway, I convinced him. and I always go with the farmers to these meetings and sit down in the boardroom, because, you know, they're going in there a little bit wary, right? They don't know who these people are. So I'm the guy that's the quarterback between them. And most of these things end up fairly well. In this particular case, you know, basically what happens when I get into a situation like that, I take all the information I've been given and forward it to the accountants ahead of time with my comments, so that they kind of know what the situation is coming in the door. Yeah. And these guys already had a whole bunch of stuff laid out on their big whiteboard in the boardroom. And anyway, cut a long story short, they did some pretty creative accounting. They were able to basically, the wife wrote out a check to the husband for she basically, and I still haven't figured out how they did this, but she basically bought the combine, the swather, and the four-wheel drive tractor from the husband. She wrote out a farm check to him. It bumped up the adjusted cost base, or the cost base of the units, to current fair market value, so that when they sold in the auction sale, there was no recapture. You know, so it's a tax strategy basically. And then, as far as the proceeds from the farm sale, in Canada we have this thing where if husband or wife have contributed to a registered savings account for a long period of time, they can actually go back, and for every year that they contributed, they can add another $1,500 to $2,500 for every year, and take that money directly out of the farm account and put it into their savings account, and not pay any tax on that money. You know, eventually they will when they take it out, but in that particular case, like I said, they were able to take out, you know, well over $100,000 directly out of the farm sale, and significantly cut the tax bill that they had to pay. Yeah. You know, and then you know, going from that point on, I convinced them to fix up the house, repaint it, modernize it a little bit, subdivide the acreage out from the quarter, because in the area that they lived, there were a lot of guys that work in the patch contract, and those guys always like to buy an acreage so they can run a few horses or a couple of cows or whatever. Yep. And of course, they always like to have a barn to park their truck in. And, you know, just in doing that process, the guy that was renting his land ended up buying it from him, and they sold the acreage separately, and they were ahead over $100,000 even after subdividing and all of the upgrade expenses on the house. And the part of the deal with the neighbor that was renting purchasing their land was that he said he'd build a new house in town for them. Okay. So you know, and then I helped them with the financing of that, and just to get through construction and stuff. And so now, you know, they have a very nice home that's paid for. They have money in the bank. They're never going to have to worry about running out of money. And once a year I go up there, and they give me a check to add to their savings and feed me supper.
That's awesome. And I think that's what it's all about is you know, 5 years after you work with clients, if they're in, I mean, regardless of how much you charge them for your services, if they're forever feeling indebted to you because of what you help them do, that's what it's all about, don't you think?
Well, yeah, you know, I'm a commission paid guy. I don't charge by the hour. Yeah. You know, yeah. So, and I tell people, you know, I said, the only expectation that I have is if I work with you and we develop a plan, you know, I expect to have first right to sell you any insurance if you need it, or handle your investments or whatever, right? And nobody ever has an issue with that. Yeah. Especially when they see the amount of hours that you put in.
Yeah. And to go off on a totally different topic here, if you're a young farmer, a son or daughter that's wanting to buy into the operation, and there's 2 or 3 siblings that are not farming, they're living far away in the city, not involved in farming operation altogether, what is your advice to them as to how to approach the strategic planning of succession planning.
Well, the one of the obvious first things up here, as many other places, is the price of land has tripled in the last 10 years. So the thing that you have to point out to them, if their brother who's 40 years old has been working on the farm for 20 plus years with mom and dad, the first issue that they got to think about is, he may not have taken much for wages, but he's put an awful lot of sweat equity into the farm.
Yeah.
And then you start, questioning them and say, okay, well, you're a teacher and, you're an oil field geophysicist. I said, somebody paid for your college education, and it was probably the mom and dad and the farm. And you've all got good jobs. And yes, I know you all have mortgages, but the reality is, at the end of the day, your brother can't afford to buy the farm again from mom and dad. And you have to accept that, at the end of the day, we'll develop some kind of process where you'll get some kind of equitable settlement, but you're not going to get, you're probably not going to get equal value to what your brother's getting. And that's fair. And as long as it's laid out in terms that they can understand, usually not too big a problem.
What kind of financial tools are you do you commonly sell so that it is fair and equal?
Well, obviously, one of what we always look at is, what the farm or the parents can afford to pay, and B, what's the cheapest way to finance at the end of the day when mom and dad are passed on, right? So, and the reality is there's only three ways to do it. Either the mom and dad start putting money into a savings account, so when they're gone, the money's there to give to the non-farming kids. Not very practical, and very few people would do it. The other choice is to wait till mom and dad are gone, and then the poor SOB that's stuck with the farm ends up having to go cap in hand to Farm Credit or whatever bank to try and remortgage the farm, basically. In most cases, the most cheapest and most effective way is a joint last to die life insurance policy. And, and this is another part of my mission in dealing with young farmers, is to say, look, you guys need to understand, you need to buy lots of insurance while you're young and healthy, and just buy the cheap term insurance, because at some point down the road, you'll be able to convert it to permanent coverage. Because the trouble is, when people get 70 plus, the cost of the premium skyrockets, and they might not even be insurable.
Yeah. And what kind of discount do you see families giving the son or daughter that's buying the farm on the valuation of the farm?
Well, some parents would like to give them 100% discount. In other words, they'd like to give the farming son the farm, and the problem is we've got, the smaller family farms around here. So I'm talking 3 to 5 quarters of land, where mom and dad have basically scratched out a living, but never really put a whole lot of money aside. Of course, when you get talking to mom and dad, well, we'd really like the kids to get the farm, so that's either the farming son or, the farming son and the daughters. So, they want to split the farm up, which is the worst thing they can do. Yeah. And, and you say to them, well, folks, that's great. But, so you're going to give away the goose that laid the golden egg, and you don't have any more eggs. And if you want to move to town and buy a condominium or a house, you're talking $300,000 or $400,000, and not on top of that. If you're in your 60s, where's the money coming from to support you guys for the next potentially 25 or 30 years that you might live?
Yeah.
And that's a hard conversation to have with people, but you'd be amazed at the number of people that really don't think that through.
Yeah. But what are you finding is the average discount that families are giving their sons and daughters on average?
On an average, I would say probably 25 to 30%.
Okay. Yeah.
Sometimes better. It just kind of depends on the land and the area.
And is that how do you suggest that? Is that just simply by a lot of families, you suggest the date that the son or daughter came home to join the family business, which might be 10 years ago, just simply putting the price of the land based on the land valuations at that time, or how does the son or daughter gently suggest that idea?
Well, part of the problem is, when you've gone through a 10 or 15-year period when the price of land has tripled,
yes,
people's expectations become very unreasonable, right?
Extremely.
Greed is an insidious thing, right? When the non-farming kids or the kids see, the neighbor next door selling land, for $4,000+ an acre or more, depending on where the land is, their eyes light up and it's pretty easy to get greedy, right?
When I graduated from high school, my principal called me to the office. The only time I was ever sat in the office for in trouble, and he says, "I heard you're going to go to agriculture college. Why are you going into a dead-end job?" I think that was 20 years ago, and the kids that graduated and graduated from high school and went to be an engineer or went to be a doctor or went to other professions, they forget back 20 years ago, farming was not a profession anybody wanted to get into. It was seen as a waste of time.
Right.
Now it's seen as, that with land valuations, it's completely changed. So a lot of people my age, I'm 41, there's a lot of people my age, my generation, that are having to pay full value land in our town, where I'm from. It's gone from $5,000 to $25,000 an acre. In Mitchell, Ontario. It's crazy that. So, what do you suggest? That you you pick a date and get the land value based on that, rather than saying to your siblings, "Can we get 30% discount?" Is that easier to sell? Do you find if you're the sibling that's farming, is it better to get a valuation based on a certain date that goes back before the land price is spiked?
To be honest with you, it really depends on the individual family. There's part of the problem is it's like what's a fair price to pay for land rent? It's all over the place depending on demand, right?
Yeah.
So like I said,
this is the $1 million question tonight. That's all.
Well, no, but it's a significant problem, because the trouble is, I've been working in Canada for 46 years now, and I go back to when I started working for New Holland as a service rep. I remember going out to combine farmer nights and walking around a brand new 995 diesel hydrostatic combine that was $32,000, and I remember farmers walking around it and saying, "Geez, that's a lot of bushels of grain to buy that thing." Now a combine's $600,000, and the price of grain's not a whole lot different.
Yeah. It's
so that's the ludicrous part about all of this, right? And like I said, the situation in central Alberta is just going to keep getting worse, because there's no downward pressure on land prices, and there's a perfect storm happening. We've got people coming from Europe that are selling a square meter of land over there and buying an acre here. We've got Hutterite colonies that are expanding, and an average colony needs 5,000 to 10,000 acres to set up a new colony. And we've got corporate farms, and we've got hedge funds and teachers' pension plans all vying to buy up land because they see it as a really good investment long term.
And you've been at this for 17 years now, Peter, and you've been in agriculture for a long time. Have you seen, because of appreciated land values, have you seen lifestyles change within the baby boom generation? Like yesterday, I was working with a family, and mom and dad did the calculations of what they were drawing from the farm. It was $150,000, and it was what I considered a small family operation. And the son had to pay a huge amount, a full value for the operation. They're going to break by doing it over 20 years and taking back the mortgage. But still it was a pretty high price.
Right.
And I don't know if he can cash flow it. At some point, Mom said, well, that's what we can afford today. And I'm like, well, that's great, but I can't predict the future, but I know at some point in the next 20 years, you're going to be hit by something.
Right.
You just can't afford $150,000 for what is pretty much a Mickey Mouse operation.
No, and that's ludicrous. I look at, just simple thing here in Alberta right now. We have this bovine tuberculosis outbreak. So we got a bunch of ranchers down in southern Alberta whose herds are all quarantined. They've been quarantined since November. Normal calf sales are in November, December, right? And so these guys are sitting on a bunch of cows that they never expected to have, and no feed, because they only put up enough feed for the ones that they hold back for breeding stock for the next year.
Yep.
And they're sitting now twiddling their thumbs, wondering what the hell the government's going to do. And of course, the problem is when all of your income comes in from the result of calf sales, you've got machinery payments to make and bank payments to make, and on and on and on, right?
Yep.
And that's we went through a period here where cattle prices were so ludicrous, it was beyond ridiculous. We're talking 3 years ago, the price of cows was double or triple what it has been on an average, and now the price has somewhat collapsed again.
What do you say to the mom and dad if you're a son or daughter that's wanting to buy the parents out, and they come up with a valuation on the farm that just you can cash flow today, but you just know it's tight? What is your suggestion as a financial planner of 17 years of how to approach that without being offensive to mom and dad?
Well, you just have to. It's plain and simple numbers, and like I said, that's one of the benefits of working with accountants is we can crunch a lot of numbers pretty quickly, and you can just say to them, what happens if you have a crop failure, or you have a drought, or you get snowed in. This year we had early snowfalls, and some guys have 3/4 of their crop still out under the snow north of here.
Yeah.
The reality with farming is it's a high risk business, right? You've got so many unknowns and variables. And I tell people, if you're going to lock yourself into a somewhat ridiculous future cash flow payment program, you're just setting yourself up for disaster.
Yeah, I agree with that.
None of us can predict the future, right? Who could predict subprime mortgages?
And how do you have you ever come across a situation where, let's just throw this out here as an idea, it probably never has happened ever before, Peter, but a daughter-in-law and the parents don't get along, and the son wants to purchase the operation. Have you come across that? Do you have any advice to any daughter-in-laws or son-in-laws that are listening right now as to how they should approach the succession planning experience?
Well, it's tough. I've been listening to Ellen Frey's, quite a few times, and she's a very well-respected farm mediation person here in Canada. And she always talks about the daughter-in-law, mother-in-law issues, right? And it's tough. Son goes to university and then comes home and works on the farm and brings a city girl home with him, and of course, her parents come out to the farm and they see the farmer driving a $60,000 pickup and $3 million worth of equipment sitting in the yard, and and their eyes bulge wide open, and in some cases the expectation of the daughter is tempered by what her mom's telling her, and it creates a real nasty situation. And and then what happens is, if the daughter-in-law's been around long enough to qualify for dower rights, she can all of a sudden up and leave the farm and say, well, I want half of whatever the increase in the value of whatever your son owns. And a lot of people end up, one of the mistakes that people make here is putting kids on title. If mom and dad put a kid on title on a quarter section of land, he's now a third owner of that piece of property, and they can't make any legal decisions with regard to renting, mortgages, whatever, that property without his say so. And then if he gets married, and then down the road, the wife says, screw this, or for worst case scenario, somebody marries a daughter that comes in on the farm, and the daughter's on title. All of a sudden they say, well, I'm out of here. All of a sudden they're entitled to 1/6 of the value of that property if they've been there long enough. So it gets pretty ugly and interesting in a hurry.
And have you not seen, this is more common than people think. Would you not agree?
Yep. Oh, like I said, I've been involved in some ugly divorce situations, and and I be honest with you, I try not to take sides in it's hard not to take sides in divorces, but you've got to be sort of neutral, right? And I have to admit, I've got three divorce clients that I still deal with both parties, but simply because we were able to work it through in a relatively amicable way and keep the lawyers out of the situation.
Exactly. Yeah.
Right. And deal with a marriage counselor mediator to say, look, you guys got to get on with the rest of your life here. Your hubby's got a farm, and you can't have him split up the farm or sell 50% of the farm equity or refinance it and survive.
And I think the key is to do what's right for the kids.
Yeah, well, and that's the other side of the coin is, if they've got 2 or 3 kids, okay, well, don't get fighting over or in front of the kids.
Yeah. But I also find that if you can get the husband and wife to focus on doing what's right for the kids, so that the kids have the possibility of farming 20 years down the road if they want to.
Yeah.
They may not want to, and that's fine. But at least they have their childhood. They have some experiences on the farm.
Right.
That's how you get through those kind of situations. But I've seen a lot of situations where, the husband and wife have problems like all couples do. But the succession planning experience catalyzes hard feelings.
Right.
And actually, I've seen parents withhold assets and withhold doing succession planning because of a fear of divorce. And in those cases, that causes the divorce.
Yep.
So it's I don't know if you've seen that as well, but
oh yeah, well, I was one of 4 partners in a farm equipment dealership, and we had one partner that felt that it was his right that he could go golfing anytime he felt like it. So he wasn't a partner for very long. but this stuff happens, right? It's marriage is a partnership.
Yeah.
Right? And the more people you get involved in that partnership, the more complicated and difficult it becomes.
And that's what a family farm is, unfortunately. Well, fortunately and unfortunately.
Well, typical situation. A son gets married, brings a new wife to the farm, and then mother-in-law just thinks nothing of, walking in the door without knocking and doing whatever, right? And and the daughter-in-law's nose gets out of joint in a big hurry, and on the next thing you know, the fur's flying.
Yeah, and I get called out for that all the time. So what's the philosophy? Unfortunately, that's what I have dealt with a lot in the last 10 years. But because we've been there myself, I've been able to sort of help a lot of families. What's the biggest philosophy? What's the biggest thing to watch for if you're a son or daughter or parents what's the things that you're probably not going to be expecting that you should be watching out for going into the succession planning experience. So let's say you haven't started the succession planning experience. You've gone to some seminars, you've heard the regular stuff. What are the things that you think are not often said or not said clearly enough that the son and daughter should look out for, and also the parents should look out for from their different perspectives? And then,
well, like I said, it comes down to the fact that, there's a lot of assumptions that take place.
yeah,
And the old saying is, making assumptions makes an ass out of you and me, right? So,
yeah,
and the reality is, without some very frank discussions, things go haywire pretty quickly.
yeah,
And the bigger the pie, the more difficult the situation becomes, right? And the reality is, you go back to grandma and grandpa's generation, they didn't talk about, you couldn't get them to talk about money under any circumstance, right? They
yeah,
would never talk about what was in their wills, because that was completely private and confidential. And I tell parents, and the kids on farms is, if things are gonna be successful, you have to have some pretty frank discussions about things. The kids kind of need to know what the parents are thinking. The worst thing that can happen is, the parents can say, well, we're going to set the two of you up as our executors, and not realizing that, the one that's on the kid that's on the farm, and the one that's 300 miles away working at in a college or at a pretty high paying job, all of a sudden, when it comes down to they're the executors of the farm, there's not too much commonality between the two of them.
yeah,
And then the issue is, if one of them lives a fair distance away, there's an awful lot of paperwork that has to be done, that has to be couriered backwards and forwards, and so I tell people, my job is not to be a mediator, because I'm not qualified to do that, but I am qualified to I am able to help people and say, look, I'm not prepared to do this. I don't want to be a referee, but I do know good people that we can bring in to do that.
yeah. Well, that's, I really appreciate your time.
Oh, anytime.
And again, I've been speaking tonight with Peter Boyes. My name is Andy Junkin of Agriculture Strategy. I've been speaking to Peter Boyes of Boyes Financial Services. And what's the phone number they can call you if they ever want to have a chat?
It's pretty simple. It's 403-742-6450.
And your website's what, Peter?
Peter at Boyes. My website. Good question. It's on my business card.
It's boysfin.ca.
Yeah, it's boysfin. It's www.boysfin.ca.
Okay. Well, thanks very much for your time, and you take care, and God bless.
Anytime, and we'll look forward to talking in the future.
Yeah. Yeah.
And keep up the great work you do.
Appreciate that.